Welcome, folks, to CryptoNews Global. I'm your host, Nick Toka. On today's show, Bitcoin fighting back, sitting around even. Let's hope the price starts to spike. We are seeing that countries around the world are starting to print like mad. We are going to go through Bitcoin price that erased the daily gains today as Fed Chair Powell highlights tariff risks again. How expanding global liquidity could drive Bitcoin price to a new all-time high. We've been talking about this quite a bit. Now there's a elaborate story that gives us more information. Bitcoin wallets with 1,000 to 10,000 Bitcoin rise. Will whale confidence spur a bull run? And also big news, Panama City Council greenlights crypto payments for tax and public services. All this and so much more in today's show. Welcome, folks, to CryptoNews Global. I'm your host, Nick Toka. Today is April 16th, 2025, and Bitcoin's up about 1%, kind of going sideways as the whole market is. Really, everything's between all the big coins anyway, between zero even and, 0.5% down, 0.5% up. Pretty steady for today. Let's get right into a Bitcoin technical analysis and see what we are talking about. Bitcoin sitting at 84,140 even, up almost 1%. Ethereum down 0.4%, $1,583. Solana down 0.5%, 126. XRP steady at $2.08. Doge also steady at 15 cents. Taking a look at the crypto bubbles, we've got for the day about a 60-40 mix between red and green. Fartcoin up 9% again. Core up 10%. Radium up 10%. For the week, we've got XCN showing up 50%, but if we see for the daily, it was down 5%, so it's not really continuing its uptrend. Fartcoin, though, 21%. Radium, 34%. Zooming out to the monthly, Fartcoin is the biggest gainer. 190% up for the month. Insanity. Shitcoinery. That term has whole new meaning with Fartcoin. Looking at the total hash rate for Bitcoin for a 1-year time frame, we've got the hash rate way above the actual Bitcoin price. So hopefully these things will even out very shortly. We see there's a kind of a convergence coming between the two. So hopefully the Bitcoin price spikes and we will see the hash rate also spike coming up soon. If we go all time, we see that the price and the Bitcoin hash rate kind of follow the same path. Let's get into the global M2 money supply because we know there's going to be some big money printing around the world coming up. Here we've got the M2 money supply in pink, Bitcoin price in white, and they very, very closely follow each other as we see in this graph. So I do know that the money printer is going to be turning on very soon, and if the money supply goes up here, like let's take 2020 for example, see the price here went pretty much straight up, and so did the price of Bitcoin. So I am anticipating by shortly, they have been printing more money. If we go into a closer view, let's go into this kind of view here. We'll see, this is almost day by day, but we do see an uptrend here. This very likely is going to be continuing, coming up soon. So I expect that the price of Bitcoin is also going to follow it up. It's been happening in the past, and there's no reason why it shouldn't happen this time too. If we look at this chart, there's almost nothing else that follows as closely as the M2 money supply with Bitcoin. I mean, check it out, almost identical, overlapping each other here. Bitcoin total market cap right now is $1.67 trillion, Ethereum 191 billion, XRP 121 billion, Solana 68 billion, Tron 23 billion, Doge 23 billion, Cardano 21 billion. Total crypto market cap is sitting at $2.62 trillion, with Bitcoin holding just under 64% of that. Ethereum 7.3 and XRP 4.65%. Currently we're at a 29 in fear. In our crypto fear and greed index, yesterday was 38 in fear, and last week was a 18 in extreme fear. There's approximately 1,091 days until the next Bitcoin halving in 2028, with 157,246 blocks left to mine until that time. Gold is just kicking it here, up another $500 billion in market cap since yesterday, currently at $22.5 trillion. Apple at 2.9 trillion, Microsoft 2.7, Nvidia 2.5, Google 1.8, Amazon 1.8, Silver 1.8. Those three are very, very close to each other. Bitcoin 1.668 ahead of Saudi Aramco at 1.654, and Meta at $1.3 trillion. Currently, you can get 1,087 Satoshis for one fiat US dollar. Current U.S. national debt sits at $36,734 billion, which equals to $107,372 per U.S. citizen, or $323,049 per U.S. taxpayer. The Doge clock savings, Doge Department of Government Efficiency has saved U.S. taxpayers $326 billion so far, which equals to $2,900 per U.S. taxpayer. So I'm not sure why these guys are burning down the Tesla dealerships. It's a little weird. The media's got them in some kind of haze. And stop watching CNN, folks. If you want something objective instead of subjective like CNN or all these mainstream medias, watch Daily Wire. Ben Shapiro, he gives you the straight shit. He doesn't sugarcoat anything, and if Trump's wrong, he calls him out. If the Dems are wrong, he calls them out. So very much a straight shooter. I'd recommend, if you want to have the real truth about the U.S. government, watch their show. Turn off CNN. They're brainwashing everybody, folks. I mean, look at this. Savings of $326 billion. They're saved every single taxpayer almost $3,000, and they're like burning down and egging their cars and scratching them and spray painting them and blowing them up. And what are these people thinking? Guys, get off the bloody CNN, please. You're going to drive yourself crazy, and for what? Because they saved you $3,000? In 3 months, they saved you $1,000 a month, and you're crying about it? I just don't understand. Peculiar, folks. It shows you the strength and the reach that the mainstream media has, and the faster people acknowledge that, they've pulled a cloak over your face and are feeding you crud, the faster you're going to wake up and, take your life in the right direction and stop believing CNN, folks. It's a little much at this point. I'm seeing all these protests, and it's just crazy how the Dems are, saying everything's great, we are such good people, and then they're out burning cars and protesting in the street and causing, like they are the real crazy ones here. They're freaking out completely. Not good for the country and not good for themselves either. I just don't get it. Again, watch Ben Shapiro, folks. You'll really get a good handle of the U.S. economy, an objective view, a very, very smart guy who wants the best for U.S. as well. And again, you're being saved money and you're throwing eggs at them. Even people driving Tesla, it's just an oxymoron. We want people to help the environment, and then there's no more, you can't get more U.S. made than a Tesla. It doesn't exist. Even GM, Ford, their parts are outsourced. Tesla is like Tesla. It's U.S. 100%. And so you want things that are better for the environment, things made in the U.S., but yet because they're saving you $1,000 a month, you're freaking out. So that tells you that you need to turn off CNN and CNBC and CBS. And, I used to watch Colbert, but it just, I couldn't stand it anymore. Just he's being fishboned by the mainstream as well. I just can't fathom how he's gone that route. And Stewart as well. I don't know. I mean, even these guys have a veil covering their faces. Check out, I have no affiliation at all with Ben Shapiro. But I do know that he's very objective and he wants specifically what's good for the country. I don't think he's got a TV show. I think he just has this Daily Wire online platform thing. But apparently he's got 1 billion viewers a month. So, pardon me. I think it's 100 million. At one point, he was the most watched person on YouTube. So it's not like only a couple people are watching this thing. Now, as for today and as for the biddy, Bitcoin price erases daily gains as Fed Chair Powell highlights tariff risks. Bitcoin's price volatility returned today as the asset had climbed beyond 85,500 but fell sharply after Jerome Powell, the chairman of the Federal Reserve, addressed the potential impact of the tariffs against China and other nations. As reported by CNBC, again, what can I believe it? Powell said a potential rush of imported goods to avoid increasing tariffs could weigh on estimates of gross domestic product. Rush on imported goods, eh? So are the ships traveling faster? How can this takes weeks? I think the journey is a month to get here, for example, from China. And suddenly there's a rush? I don't get it. Again, and I don't trust this Powell character either, and I don't trust the feds. We all know that the feds are not a government entity, right? The Federal Reserve is a private company. So who oversees the feds? Where's all this money being printed from? It's just such an interesting dynamic that oversees the U.S. government and the central banking system that, no one really knows what's going on, and nobody should trust it. The U.S. central bank might find itself in a difficult position, having to choose between controlling inflation and supporting economic growth, he said. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close, Powell noted. Answering a question after his remarks, the Fed chair said it is likely the tariffs, which could rise to 245% for China, will move the central bank away from its goals of balancing inflation and ensuring full employment. Powell also addressed the country's interest rates, but he gave no clear indication of what the Fed's next move will be. So far, the central bank has left them unchanged for 2 consecutive meetings this year, and Powell's words hinted at more similar developments. So, multiple times, Trump has asked the Fed Chair Powell to lower interest rates. He hasn't done it. This would be a very, very good thing for the economy, a very, very good thing for consumer. If he wants to counteract these tariffs, right, he could lower interest rates by 3%, right? Right away, there's a huge, if there's 10% tariffs on everybody and they lower the interest rates from 4.5 to 1.5, then there's 3% gone right away, right? Think about it. But he's not doing anything. Once the money is owed, the money's already owed, but once there's about $9.5 trillion that's coming due for the U.S. debt this year, so they have to refinance $9.5 trillion bucks. If they refinance that $9.5 trillion in high interest rates, the country's screwed, folks. Like, so far, they've paid $5 or $6 trillion in just interest. This year, or 2024, they paid, it's in this chart that we look at every day, total interest paid $5.4 trillion, and I saw somewhere the trade deficit is $1 trillion, so this is what they're kind of complaining. Trade deficit with China, $300 million. Get off the screen. There we go. I want to see the total debt, the total interest on debt. So this number is what this $1 trillion. Yeah, $1 trillion was paid in interest, folks, in 2024. In 2024 alone, $1 trillion in interest based on this debt. The defense spending, $893 billion. The interest, just the interest, they haven't done anything to the actual debt. The interest, $1 trillion motherfucking dollars. So talk about being in the hole. And now they need to refinance 10 trillion of this, 9.5 trillion of the 36.5 trillion. All right, so 1/3 of it has to be refinanced this year. And what happens if they refinance that at a high interest rate, right? We all know what's going to happen. It's the same thing that's happening to you and I and the common folk when they have to refinance their mortgage at these high interest rates, right? No one wants to do it. Like when you go to refinance, you're screwed, right? Your mortgage has gone up. You see how much it's gone up. For most people, it's hundreds, right? Or even $1,000 a month. Just insane amounts, just because the interest rates gone up. So if we're talking $1,000 a month on your mortgage, right? What is that going to do for a $36.5 trillion debt? So this number here, interest on debt, this 1 trillion could very easily become, 2 trillion a year or 1.5 trillion a year, effectively doubling defense, equaling Social Security, and equaling Medicaid. So just insanity. And then we've got Powell, the whole reason that I'm bringing this up. We've got Fed Chair who doesn't want to lower the interest rates. He's going to wait for the last second until he figures out what's going to happen with these tariffs until he makes any kind of move. So you would think that they would be having some kind of closed door discussions between Powell and Trump. Okay, this is the direction we're going to go. You need to start lowering interest rates. You're going to need to lower interest rates for us to refinance the coming $9.5 trillion that's coming due for refinancing this year. So insanity. While we're here, we have a running tally on the U.S. money supply, what we were talking about before, where the Bitcoin follows the M2 money supply. So this is just U.S., right? Current money supply in the U.S. 21 trillion bucks. So the debt is more than the actual money supply, right? Things that just aren't making that much sense, folks. And of course, I've been talking and not having the correct screen on all this time. So let's quickly go over what I was saying. The interest on debt right here, $1 trillion. This is what was paid in a year. And this is what I was talking about, the defense budget, $893 billion. So less than the interest. Social Security, $1.5 trillion. Medicare, $1.5 or $1.6 trillion. But what you really want to look at is this, interest on debt, right? And that says net. It's not even gross. Let's see if we click on this to get even deeper. Now there's nothing more there. M2 money supply, as we were saying, 21 trillion, almost $22 trillion. So, and I was also mentioning that 10 trillion, 9.5 trillion of this $36.5 trillion is coming up for renewal in terms of debt financing this year. So the Fed and Powell seems to me doesn't give a shit about the common folk, right? They'll let your mortgage go up. They don't care. They'll let the debt go up. It's almost like they want to bounce the whole U.S. economy. They're saying our focus is on jobs. Our focus is on getting down inflation. I don't get it, right? Bring inflation down. You want to do that by lowering interest rates. When you lower interest rates, then right away there's lower inflation. Right away there's, they see it the other way, right? But right away, someone who wants to open a business can now open a business because the interest rates are lower. He can get a loan at a lower rate and actually open this business that maybe they've been waiting on because the interest rates are so high they can't afford it. Then they open the business, then more jobs get created, and the economy does better. Then interest rates can come lower and lower and lower. Simple. Now, the way they see it, conversely, is Inflation is high, so we're going to bring interest rates higher so that people are borrowing less. And when they start borrowing less, then they're going to stop spending more, and the economy will slow naturally. But it just seems backwards. The economy was booming when interest rates were low. Interest rates have been, for about 20 years now, very, very low, and the economy has been doing great. Outside of the 2008 banking crisis, which they should have just let these Lehman Brothers just fucking tank, quite honestly, and all the banks tank and force them to pay out the citizens first instead of paying their they paid the banks first, right? Which is complete insanity in itself. That's the way the contracts work, I suppose. Now, we talked about global liquidity, and there is a full story how expanding global liquidity could drive Bitcoin price to new all-time highs. Bitcoin price trajectory is once again capturing headlines. At this time, the catalyst appears to be global liquidity trends reshaping investor sentiment. It's almost like everything I talk about in the show 2 weeks later, a story comes out. And I know these people aren't watching my show. It would be nice. In a recent comprehensive breakdown, Matt Crosby, lead analyst at Bitcoin Magazine Pro, presents compelling evidence tying the digital assets' renewed bullish momentum to the expanding global M2 money supply. His insights not only illuminate the future of Bitcoin price, but also anchor its macroeconomic relevance in a broader financial context. So, yeah, here's the money supply. Here's the biddy. The biddy is in black. The money supply is in blue. And we do see things are starting to spike. Compare the 2020 increase and compare it to what's happening now. I feel like this is going to start really going at a 45-degree angle instead of the maybe 20-something degree angle that we're seeing here. We also saw, look, that this is in the middle of, or toward the exit of Biden's term. Like, let's print $1 trillion before we get out. Regardless, even Trump is going to print a shitload of money. They want to bring all this manufacturing back home. They're going to need to print a lot of money to do all of these projects. Now, in the long run, this will be completely worth it. But in the short run, the money printer is going to get turned on and the money printer is going to go crazy. In Europe, they've said they're printing $1 trillion minimum more euros. In China, I've said it before, they're pretty much screwed. Their economy's tanked. Their housing market tanked. So their interest rates currently at 1%. So the only possible thing they can do, they can't bring down the interest rates anymore. The housing market's shit. All they can do is print money. So you're going to see the whole world starting to print money. And the chart I've got is the global M2. This is important too, the ISM. Once we get above 50, then the manufacturing is really taking off in the States. And if we go historical, we're way down in terms of manufacturing. But if you kind of correlate this with the price of the biddy, this is the last all-time high right in here, almost a mirror, right? And then again, 2017, here's the high. But I really wanted to show this M2 money supply, a perfect mirror of the Bitcoin price. And this is globally. This is based on 21 central banks, not just the U.S. So I really expect an upturn in the money printing right here where we're at right now, and then I expect the Bitcoin to follow. It doesn't follow right away, and I think this story explains a little bit more. Generally, it follows about 2 or 3 months after. We kind of see it in the chart here. M2 spiking here, and then the biddy kind of following after. M2 spiking here, and then the biddy kind of following up. M2 spiking down here, and then the biddy posting huge gains. Bitcoin price and global liquidity, a high impact correlation. Crosby highlights a remarkable and consistent correlation, often exceeding 84%, between Bitcoin price and global M2 liquidity levels. So exactly what I was saying, consistent correlation, 84% correct. As liquidity increases across the global economy, and liquidity effectively means the printer goes and the printer's printing money. So as liquidity, as more money is added by money printing, and this is what countries do, there's no money's worth jack all, folks. They can print as much as they want, whenever they want. It's just a piece of paper. That's why people are putting their money toward gold, and that's why people are putting their money toward the biddy, because if you can just add whatever you want, then that's what you'll do. If you need money, all you have to do is print it. If it was real value money, i.e., let's say gold historically, or silver, if they needed more, there's no more. So then that makes the actual value of it go up. If it's required, more of it's required, and they can't find any more in the earth, then it becomes more scarce. Same with the biddy, there's only a certain number that's going to be mined, and that's it. However, with the fiat currencies around the world, it's not just the States, if they need more money, they just turn on the printer, right? They can add as much as they want. I've used this diagram a few times, and I see we've got a number of live viewers. So let's run this diagram again. Okay, so let's just take a basic program here, and let's create a fake money supply. Okay, so let's go with this tool. Okay, so this right here is our current money supply, right? This black line. This vertical line, this is your cut. This is how much money you've got, okay? I'm not talking about this up here. I'm just saying this little sliver compared to the whole money supply. That's your cut. So now what happens when you double the money supply? Your cut gets chopped in half, doesn't it? So that shows you right off the hop that your money is worth now half as much as what it was. Okay, so let's say they keep printing, and now the total money supply extends all the way out to here. Now your money's worth even less. So now let's do it even more realistic. So let's call this. Now they've printed this much money. Right? You still have your little sliver, but your piece of the pie compared to the whole money supply, you used to have, this, right? This was the whole money supply. But now, so, your cut was substantial. You had a little bit of money, fine, but you had your cut, right? Now, your cut is based on this money supply. So check out, like, how your money has lost value over the years. It's a very simple kind of analogy for me to show what exactly money debasement is when they say money debasement, money devaluing. When they say adding liquidity or adding money to the global money supply, this is what they're doing to you. Okay? And when they're talking about inflation, no kidding, there's inflation, because suddenly your money can buy less things, right? If your money's worth less, if today it's worth $1 and they print 100% more money, right? So now the money supply is doubled. Your dollar is now worth 50 cents. So we've got decades and decades of this money printing. So this chart is not that far off from what's actually happening. Your little piece of the pie has not changed. The complete total money supply has changed huge, and it continues to change. And this is what's going on all around the world. It doesn't matter if you're in US, China, Europe, anywhere. There's only one country, I believe, which is some little small island nation which doesn't do this. But otherwise, you're pretty much screwed. And it doesn't matter where you are in the world. This is what's going on to your money. So keep that in mind, folks. This is why you're seeing a lot of the smart money go into gold. You're seeing a lot of money go into Bitcoin. Why do you think BlackRock bought $50 billion of Bitcoin? I think it's more, actually. They've got something along those lines. Why do you think Trump wants to start putting money into Bitcoin in order to pay off the U.S. debt? Because they know that fiat money is not going to pay any bloody U.S. debt, because it's just it's just some ink on a paper, and the Fed decides to print it. And what did we see in we saw U.S. money supply now 22 trillion. So if they make this suddenly 30 trillion, your money's gone down by 30%. If they make it 40 trillion, your money's gone down by 50%. So they just keep doing this to everybody, and nobody's the wiser, right? Let's get back to our story. Crosby highlighted remarkable, so 84% of the time it follows the M2 money supply and the Bitcoin price follow each other. As liquidity increases across the global economy, Bitcoin price typically responds with upward movement, although with a noticeable delay. Yeah, exactly. It follows. I was saying 3 months here, they've observed a 56, very tight, it's good for them, 56 to 60-day lag between monetary expansion and Bitcoin price. So very freaking specific, right? So if we can find out when the money printer is printing and then count 56 to 60 days, and it's 84% accurate, talk about, timing the market, right? So very, very interesting. I didn't know they had it calculated so well within a 4-day span. That's very freaking cool. This site's insight has recently proven accurate as Bitcoin price rebounded from lows of 75,000 to above 85,000. This trend closely aligns with the forecasted recovery that Crosby and his team has outlined based on macro indicators, validating the strength and reliability of the correlation between driving Bitcoin price upward. Why the 2-month delay impacts on price? Yeah, it takes that much money for the money to actually go out. Let's read it, though. The 2-month delay in the market response is a critical observation for understanding Bitcoin price movements. Crosby emphasizes that monetary policy and liquidity injections do not immediately affect speculative assets like Bitcoin. Instead, there is an incubation period, typically around 2 months, during which liquidity filters through financial systems and begins to influence Bitcoin price. Crosby has optimized this correlation through various back tests, adjusting timeframes and offsets. Their findings indicate that a 60-day delay yields the most predictive accuracy across both short-term and extended 4-year historical Bitcoin price action. Very cool. So it's pretty accurate both in 1-year and 4-year charts. This lag provides a strategic advantage to investors who monitor macro trends to anticipate Bitcoin price surges. Yeah, so, this is us, right? This lag provides strategic advantages to investors who monitor macro trends to anticipate Bitcoin price surges. So I'm going to get on this, folks. I want to find out when this printer, I know, we've got the charts, we can see the printing, but I really want to know when these printers, even more now, specifically when these printers get turned on and how much is being printed, because then we can really nail it and say, with a 84% accuracy on June, whatever, prices are going to go up. So maybe they've done the work for us here. To build a forward-looking perspective, Crosby employs historical fractals from previous bull markets to project the future Bitcoin price movements. When these patterns are overlaid with current macro data, the model points to a scenario where Bitcoin price could retest and potentially surpass its all-time high, targeting 108,000 by June 2025. You see, what's interesting is he's got it bang on between 4 days, and then he just gives a month, right? Shouldn't they be able to say June 17th, 2020, right? This optimistic projection for Bitcoin price hinges on the assumption that global liquidity continues its upward trajectory. We know that. Global liquidity, money printing, right? Continues its upward trajectory. The Federal Reserve's recent statements suggest that further monetary stimulus could be deployed if market stability falters. Another tailwind for the Bitcoin price growth. The rate of expansion affects the Bitcoin price. So global M2 versus the Bitcoin year over year. We know that. We've got the actual full chart right here. But we really want to zoom in. We can zoom in here, but we can't really go left and right. It's kind of a shitty chart. I'm going to find something better that we can kind of really scrutinize and see exactly when the spike is in more printing, because really here there's definitely a spike, right? So that would be September 22nd, 2024, and then we're talking 60 days after that, October, November 22nd, 2024. So if we open up TradingView, let's check out their hypothesis here. So November 2024, we should have a big spike in the biddy. So let's just change our chart here so we can see. You can go left, right, you can go up, down with this TradingView. If you guys haven't jumped on it, you should take a peek. It's free. Let's go into, zoom right in. Let's zoom 6 month. So here we've got November 22nd, 2024, and we do see here is November 22nd, 2024, and they said 56 to 60 days. So let's bring it back 4 days, we'll say. So November 18th, we're right here. So we did see a spike, but we saw it actually a little bit before that. So let's remember the 22nd. And if we go to here, which is, not 60 days, right? It's less. So September 22nd, October 22nd. So it's more like a month and a half. So it's more like 40 something days. is when the price jumped from here and then jumped with with this mark up here, right? So maybe we should call it 40 to 60 days to kind of give this range of 20 days, and then that would fall exactly in line with what they're saying in the story. Interesting, definitely something to look at. I'd like to get more M2 charts to kind of really zoom in on these things and see when the money's been printing. I do know that there's more good news for the Biddy, and we've got the Bitcoin wallets with 1,000 to 10,000 Bitcoins. They have risen. Will whale confidence spur a bull run? When whales start swimming upstream, it's time to pay attention. Wallets holding 1,000 to 10,000 Bitcoins are climbing steadily once again. This pattern mirrors what we saw in April 2024, just before Bitcoin launched into a major rally. It's a subtle but powerful signal. Large holders are quietly accumulating, and that kind of behavior rarely happens without conviction. As supply tightens and institutional accumulation builds, the stage may be set for Bitcoin's next big breakout. Everybody's calling for a big breakout. And with all the good news that's happened, Bitcoin, US Reserve, nation adoption, countries around the world starting to accept it, countries around the world quietly buying it, huge asset managers buying it. There was a point where it was possible for Bitcoin to crash and go to zero. That ain't happening anymore, folks. BlackRock is not buying frickin' 500,000 Bitcoin for it to go to zero, right? They know better than we do. I'm afraid to say it. But the good thing is we also front ran these assholes, right? So we got in before the big institutions. The big institutions have all these rules and regulations, which are now kind of going by the wayside. So now we can really see that a lot of companies are going to start buying the Biddy. An accumulation pattern we've seen before. Since the 5th of March, the number of addresses holding 1,000 to 10,000 Bitcoin has risen steadily from 1944 to 2014. That's the number of addresses holding 1,000 to 10,000. So it's gone up 70 addresses. Okay, an increase that closely mirrors the accumulation wave observed in April 2024. Interesting. There's only 2,000 addresses that hold 1,000 to 10,000 Bitcoin. I mean, it's not us, but these whales who hold big cash definitely are buying up the Biddy. This surge in a whale wallet activity, illustrated by the rising 30-day change metric in the chart, indicates a growing appetite for large holders. So in orange, 30-day change. So 30-day change is this purple. So whale addresses, fine, and then the 30-day change has spiked quite a bit. Historical moves have preceded significant bullish momentum, suggesting that confidence is quietly returning to the market. As supply on exchanges thins and whale wallets swell, the groundwork may be getting laid for Bitcoin's next big move. Whales are stirring. Yeah, crazy. $46 million moves, $42 million moves in Bitcoin. So yeah, the whales are stirring and they're buying up huge amounts of Bitcoin. And very soon there's going to be none left for anybody else. Again, another good piece of news today for Bitcoin. It's a small country, but Panama City Council greenlights crypto payments for tax and public services. We're seeing more cities around the world doing this, guys. Panama City sets a precedent by reconciling crypto payments and legal tender requirements through conversion. Panama City will begin accepting Bitcoin, Ethereum, and popular stablecoins such as USDC and US Tether for public service payments, including taxes, fees, permits, and fines, in a move that positions the capital as a regional pioneer in crypto adoption. Mayor announced the initiative on April 16th and called it a historic vote by the City Council to modernize public finance and expand access to decentralized payment options. This change is set to take effect through a partnership with a local banking institution that will instantly convert incoming crypto payments into US dollars, which remains the only legal tender authorized for government transactions in Panama. The mechanism allows Panama City to sidestep a national legal hurdle. Under Panamanian law. Government agencies must transact exclusively in US dollars. By integrating a real-time conversion system through the bank, the city maintains legal compliance while allowing crypto usage at front end. This workaround enables the de facto crypto payment system without requiring approval from the national legislature. So, of course, what this means is this crypto bank, who, they're doing such a great service, right, by accepting Bitcoin and doing the conversion and then giving the US dollars. But who do you think's keeping the bloody Bitcoin? It's this bank. So it's another ploy to get people's Bitcoins, but it is a good thing. They're allowing Bitcoin, it looks like Tether, Ethereum, and USDC to pay for their taxes and to pay for other services like the bus, right? You want to get on the bus, you can pay in Bitcoin now, or you can pay Ethereum, Tether. Pretty cool. I would be dumping my Ethereum on that. I wouldn't be selling my Bitcoin, that's for sure. Let the bank take the Ethereum. Unlimited supply. It's just like the fiat US dollar. It's, probably in the end not going to be worth, certainly not going to be worth as much as the Bitty, because Bitcoin's got a finite limited supply. Ethereum has an ever-expanding infinite supply. If you look at the supply of Bitcoin, it actually has the infinity signal, the double, the 8 sideways. Whereas if you look at other coins, including the Bitty, Bitcoin says 21 million. Ethereum says infinity. So it's just like the fiat money, folks. They can just make as much Ethereum as they want. So I don't really trust them. I trust Solana more. I trust XRP more. I know companies are building a lot of things on the Ethereum blockchain, but they can just keep printing more coins and more coins and more coins, and they're just going to debase it just the same way we went through that little chart where we, a couple minutes ago, just in that graphics program, where this was your little slice of the pie, and then the money supply expands and expands, and then your little money supply is still stagnant. That's what Ethereum's doing. So I don't know if I would go for it. You're better off to have a small amount of Bitcoin than full coins of Ethereum, in my estimation. Folks, remember, there is money everywhere in the world. There's almost $900 trillion worldwide in assets. So money is abundant. Money is everywhere. It's time that's scarce. So spend your time wisely, everybody. Spend less money than what you earn. This will keep your head above water, keep you in the green. If you start making more money suddenly, start saving more money. Don't start spending more money, and start saving and investing when you're young, ideally in your teens or early 20s. And hopefully you can retire when you're 40 or 45, right? If you have a great idea, don't wait on it. Even if you're not ready, start with your idea today. You'll feel fulfilled, and hopefully things work out. And if it doesn't, it'll be a stepping stone and a learning experience for your next big idea. Folks, I take pride in making this show, and I get really excited when I see a bunch of viewers watching live, and I'm very grateful for that. When you're watching or listening to Crypto News Global, you are Crypto News Global, folks. Make no mistake. I'm going to continue going out there getting the latest stories to make as much money for people as we possibly can. And the real idea here is financial literacy, and I keep focusing on that. If you go through the comments, I always leave some books there. I call them Book of the Week. I haven't actually updated it with any new books recently. I should. But for your own financial literacy, go through these books. I have them actually in order. I would start at the top. I think the first one is the Bitcoin Standard. And despite the name, the Bitcoin Standard, it actually is a very, very good introduction to money and the worth of money. The first 5 or 6 chapters don't even talk about Bitcoin at all. They talk about the history of money, what it's for, where it came from, different types of money in the past, and the types of money that will actually be worth something. Go through that list, and when I talk about spending time wisely, you don't have to sit and listen and read this book. What I do is they're free, right? I've got links to the YouTube books for all those, and I listen to it in the car. I'm driving anyway. That way I'm doing 2 things at once. I'm using my time wisely. I'm not just stupidly listening to, the same frickin' Floyd and Zeppelin, the same playlist over and over. I'm getting new information in my head. I'm expanding my knowledge, expanding my mind, getting this financial literacy. So I've got that for you there. I really encourage everybody to go and, through those books and, use your time wisely with them, ideally. And hopefully you do find this information enjoyable and informative, and you get a very solid financial literate understanding, which will only help you and help your kids. It's something that everybody should learn, and they don't really teach you in school, let's face it, right? So hopefully you like, comment, and ideally subscribe to the show and share it with your friends. I'm hoping to have between 500 and 1,000 subscribers by the end of the year. It's completely free to subscribe. Just hit that button down below, and we will see you on the next stream. Folks, thanks so much for joining. Really appreciate it.